India's top companies just posted their weakest quarterly growth in over 2 years. Hi, I'm here to break down what's going on with India's Q1 FY26 earnings slump, and what it could mean for investors like you. Let's start with the big number everyone's talking about. In Q1 FY26, the combined profit growth for Nifty 50 companies dropped to just 3.5%. That's the lowest we've seen in 9 quarters. For context, the last time profits were this sluggish was back in early 2023, during some pretty turbulent economic times. So what's behind this slowdown? First, demand is clearly softening. Consumer spending, especially in rural areas, has been weaker than expected. Major brands like Hindustan Unilever and Maruti Suzuki have raised red flags about rural sales, the backbone of India's consumption story, staying flat or even dipping. Now, some companies are still posting big numbers, but don't let that fool you. Take Reliance Industries. Their profits looked impressive, but when you dig deeper, most of that growth came from a one-time telecom windfall. Without that, their core business is facing the same pressure as everyone else. Let's talk about sectors. IT majors like Infosys and TCS are also feeling the pinch. Revenue growth has slowed to single digits, thanks to global clients cutting back on spending. Even automakers, who had a great run last year, are seeing sales momentum fade. So why is this happening now? Analysts point to 3 main reasons. 1. Slow demand, especially in rural markets. 2. A high base effect. Remember, last year's numbers were pumped up by post-pandemic recovery. Now matching that pace is proving tough. And 3. Margin pressures. With input costs rising and consumers unwilling to pay higher prices, companies are caught in a squeeze. Investors are watching all this very closely. Markets have already started to react, with increased volatility and cautious outlooks from brokerage houses. If this trend continues, we could see earnings estimates for FY26 being revised downward, which can mean more market swings ahead. But it's not all gloom. Some sectors, like pharmaceuticals and select private banks, are holding up better thanks to strong export demand and stable asset quality. Still, the overall mood is cautious. So, what should investors do? Stay alert and don't get swayed by headline numbers alone. Dig into the details, track company commentary, and focus on fundamentals. Remember, volatility can create opportunities, but only for those who are prepared. That's your quick breakdown of India's Q1 FY26 earnings slump. If you want more insights like this, don't forget to subscribe and stay tuned for updates. Thanks for watching, and invest smart.